What is going on, everybody? Today we're going over target stock, ticker symbol TGT. I went over it on my channel on Walmart and Costco this past week, and it's time to do target. We're gonna find the fair value of target stock according to Benjamin Graham formula that was mentioned in the book The Intelligent Investor. I'm gonna read the financial statements of Target and see if it's worth almost $200. This stock did a meteoric rise this year from less than 100, if I remember correctly, to almost $200. See if it's overvalued, undervalued, and basically we're gonna go over target stock. So with that being said, let's get started with target. This is the Excel that I've made from the book The Intelligent Investor, how to value a stock like Warren Buffett. This is what we got. Company name, we put target. This one is a constant from the book, 8.5, another constant. We need to find the following. We need to find earning per share. I'm gonna show you where we can finding that. Growth rate, gonna show you where we find that, and AAA bond yield of target as well. And once we have all those details, we're gonna find the fair value of target stock. So let's get started with that. This is Yahoo Finance, the summary page. Target currently at around 188. If you know, Walmart really took a beating yesterday. Right now at 138, down like 6% yesterday from 145. After they mentioned they're raising their minimum wage for 400,000 plus employees. In my opinion, this is a great thing long term, and I discussed about Walmart in the video in my channel that I will link at the end of this one. But let's focus on target. So what do we have? Market cap of almost $100 billion. Can it be $400 billion where Walmart is for a price of 800? I doubt that, at least not for the next 10-15 years, but let's cross 150 first. Earning, they are posting about 2 weeks from now, and they also pay a nice dividend of not nice, but compared to the industry it is nice, 1.42. I think Walmart is now paying a little more because the price dropped. Ex-dividend was about a couple of days ago, so you guys kind of missed it, February 16. Let's get the numbers that we need into our Excel. The first number is this one, earning per share, TTM, the EPS trailing 12 months, $7.54. That's quite a lot actually, to earn $7.50, give or take, per share. That's pretty good. There's a reason why they jumped 100% or $100 in a year. So we're taking this number and putting in the Excel, 754, and the next number that we need, if you go here to the analysis tab, scroll down, and this is the second number that we need in our Excel, next 5 years growth. This one, 13.75% growth. That's not bad. That's not bad at all. I know Walmart is gonna grow by 7% and Target is gonna grow by 13%. Yeah, people love going to Target for some reason. In my opinion, they're more expensive from Walmart. They were not the direct competitor of Walmart, the Costco was, but in this year that they become like direct competitor to Walmart, even though the prices are higher in terms of volume and customers, and just they're taking shares from Walmart, and that's a shame for Walmart, stock hodlers, but it is what it is. We're gonna go over the financials, but either way I need this number into our Excel. So the earning per share I show you in the summary tab, and 1375. So let's put those in the Excel. Back in the Excel, I put earning per share 754, growth rate 1375. That's what we just found. Next thing we need to find is the AAA bond yield of Target. Before that, we're gonna go over the financials of Target. I also added the stock price today at 188. So let's find the financials, and by the way, you can grab a copy of this Excel in the description below and value each and every stock that you like to buy or already bought, as long as you have a positive EPS, earning per share, and a positive growth. Then you can calculate, and I will show you exactly the result of Target in this video. But let's go over the financials and see if they are healthy or not first of all. I'm back in Yahoo Finance in the financial tab. Let's see what we got. Total revenue, we got ourselves, I want to see, first of all, I'm going to go over the Buffett ratios, but first I want to see that it's growing. So the revenue, you can see that it's growing pretty good. From 2018, 71 billion, then to 75 billion, another 4 billion, then 78, another 3 billion, and then a big jump in the last year from the pandemic. Everyone just going to Target for some reason because nobody wants to stay home. So they went from 78 billion, and comment below if you agree, 78 billion to 88 billion, another 10 billion. That's 3 times more than the year before. That's not bad. Let's do the Buffett ratios that he liked to look in here in the income statement. We got the gross profit 25 billion. So you take this number right here. Okay, let's take our nice calculator. You take the gross profit 25,873 and you divide it by the total revenue, the 88. Okay, 88,621, and you want to see a number of about 40% for regular industry. Walmart has 25%. They're the leader in the grocery industry. So anywhere around 20 to 25% is pretty good. So let's click enter, see what we got. 29%. That's actually a better gross margin than Walmart. That's not bad. Walmart is around 24 and a half, something like that. 29% gross. That's pretty good. It's almost 30% gross for a grocery store. They're not just grocery. You went to Target, you know what I mean. Let's see the net income, but they are compared to Walmart. That's just part of life. So for the diluted net income, you take this one, 3822, this number, the net income, and you divide it again by the total revenue, divided by 88,621. And Walmart had, I think, 3.5-4% net margin. If I'm not mistaken, I will link the video at the end of this one. Let's see what's the profit margin of the net. The net is the key. How much they get to keep, how much Target gets to keep. Let's click enter. That's yeah, even better than Walmart, 4.3%. The reason why they went up 100% and Walmart went, I don't know, 20-25% this year, which is insane for a company that size. But 4.3% net is pretty awesome. It's a lot better than Kruger that had, I don't know, 2% or something like that. You can check the other videos in my channel. Costco is around 2.1. Walmart was the leader at like 3.6, 3.8, something like that. And looks like we got a new leader, Target, and there's a reason why they ran so fast. 4.3% net. You gotta understand, it's not like you sell $1,000 and you make 4.3%, which is what, 43 bucks. It is exactly like that, net. But instead of $1,000, imagine that you sold almost 100 billion. You sold $88 billion, and 4% of that comes to a lot of money at the end of the day. That's basically it. Let's move on. That's pretty impressive so far, Target. Yeah, let's move. I'm in the balance sheet. I want to see first of all right here. That's the balance sheet. I want to see that it's growing. Total asset. So it went from 39 billion to 41 billion to 42 billion. They are growing. And I want to see the liabilities, that they can pay their long-term debt in less than 4 years, just like basically Walmart can. So let's click here, total liabilities, and you look for this one, the non-current, right here, click. And the long-term debt, that's my key, the long-term debt. So you take this number, you do another ratio of 13,613. Okay, you divide it, you take this number, long-term debt, and this is how you can do financials for any company that you are trying to value their fair value and check that the financials are good. Go back to the income statement, go down to the net income, diluted net income right here, and divide the long-term debt by the net income, 3822, and your goal to see a number of 4 and below. Let's click and see what we got. 3.5 years, exactly like Walmart. Pretty awesome. What does that mean? That means that Target is very healthy and they can pay their long-term debt in 4 years or less. That's like the check mark in Buffett ratios. If a company can pay their long-term debt, not the short-term, long-term debt, which is leases, whatever, wherever they rent the place, all that stuff, if they can do all those payments in less than 4 years based on their net income, that's a pretty healthy company, and Target is very healthy in that check mark as well. Not bad at all. Let's move on to the cash flow. Cash flow of Target, let's see what we got. Issue of debt 3.2 billion, but then repayment of debt 3.4. So they took a small loan and they paid all the other loan. They got extra 200 million. That's pretty good, which is basically this. They paid this one, the 1.7 billion got paid in here. They got extra 200 million to expand, maybe open more stores, whatever they want to do. They also did a nice buyback of $900 million. That's not bad. Sure, it's not 1.5 or 2 billion, but it's still almost $1 billion buyback. That's good. And check right here, the free cash flow, it jumped from 4 billion to almost double to 7.3 billion. If you think that the stock is expensive, you gotta look at the financials. And from what I see, the financials of Target stock is superb. That they're even better than Walmart. Not a lot, but still better than Walmart, and they run a lot faster than Walmart, at least in this year. And Walmart is still struggling to correct back to 140 right here from the crash yesterday. Not crash, but down 6% for Walmart stock is a lot in any given day. And check my video and see the levels that I will be a long-term hodler starting a position in Walmart, which is not 138 at all. I will link this at the end. But so far from what I see, the financials are awesome. All that is left to do is find the AAA bond yield, so we can find the fair value of Target according to the Benjamin Graham formula that was mentioned in the book The Intelligent Investor, which you can grab a copy in the description below of this video. So let's find out that. In order to find the last piece of the puzzle, you just Google Target corporate bond and you look for the highest number. Even though it's Target, it's not gonna be like a junk 7-10%, something like that. So I'm looking for something. I don't see a number. Let's look for a number. I got here 3.875. okay, probably gonna use this one. Target stock bond 3.875. that. Let's see if we got anything else. Another bond, doesn't mention the price. 00 doesn't mention So I'm gonna use with this one that we got. That's pretty normal, pretty average, 3.875. So let's put this number in our Excel, 3875. Yeah, back in the Excel, guys, I put this number, AAA bond yield 3875, and basically went over all the financials. They're pretty awesome. They're not they're better than Walmart. They're more efficient than Walmart. Also, like 4 times less in market cap than Walmart. They're 94 billion compared to 400 billion. There's a big gap there. I don't know if they can go to 400 billion, which is $800, but we're gonna find the fair value of Target either way according to this formula. Before we do that, guys, let me introduce myself. My name is Ziv, also known as Finance After 40. While I am new to YouTube, I have about 20,000 community members following me on TikTok, as well as Patreon, where we sell options for income using Market Chameleon software. You can grab a copy of all those stuff that I just mentioned in the description below, as well as this nice Excel that you can just plug in the numbers and find the fair value of any stock or company that you love and want to hold forever, or not forever, for profit, as long as the earning per share is positive right here and the growth is positive right here. And I show you in the start of this video how to find those two. And with that being said, let's find the fair value of Target stocks. So $300, $300, another 50+% from here. That's no, that's a surprise to me. I thought the Target at 200 is expensive. Apparently not. There's still a lot of room to grow. Their financials is pretty amazing. Yeah, and the price that Buffett will be a buyer according to this formula is anywhere below 206, and we are definitely below 206. You know, it went from $100 to $200 in a year. People think it's expensive according to this formula, quite cheap. Very, yeah, I'm glad I did this video because the financials never went over the target financials. Everyone are used to talk about Walmart and Costco as competition, but Target just blew those two away this year with the return on capital of almost 100%, which is pretty awesome. Pretty awesome indeed. If you guys gain any value from me, subscribe to my channel, hit the bell notification, leave a comment if which stock would you like me to do next. Very impressed with this price. Go grab yourself a copy of this Excel as well in the description below. Thank you very much. Target is worth, according to this formula, over $300. Thank you for that. Subscribe, and I will see you in the next video. Thank you very much. Yeah.